Like if you've got $5 million in the bank, you should not be a wholesaler to start, right? Like you should get up and leave that seminar the minute it starts.
Right.
Welcome to Real Investing, the show for everyday investors. My name's Tim Herriage, and I'm here with my buddy and co-host, Ryan Harper.
Howdy.
Howdy. So, Ryan, can I just dive straight in?
Yeah. Well, what are we talking about today?
Let's talk about how to get started in investing, and
I think that's a good place to start.
maybe how not to get started in investing.
Yeah, I think the genesis of this project was, hey, we've both messed up a lot, but your real estate entrepreneurship. And people, especially on the internet, love the fluff. They love to fluff each other, pun intended. But they don't necessarily like to talk about failures. They don't necessarily tell you about what actually it's like.
So we're friends, old Marine buddies. Yeah, we blocked each other on Facebook a couple
I've
times.
never blocked you.
Oh, no, it was just me?
That was just...
You've quit working with me. You
I have, yeah.
told me you'd never work with me again.
I
And,
never said that.
oh, well, maybe I've made that. That's
never-
why.
I have never burned any bridges.
Well,
Maybe one.
I like to build bridges, so you have to tear them down in order to keep
You got to have some source material.
But no, like we that's how we met, but we both worked for some of the same people when we were getting started, and we've worked together and at multiple different places.
Yeah, I think that the reality is most people don't realize that if you know Tim, if you know me, we've known each other for over 20 years.
Yeah.
Like, I think pre 9/11 or maybe
Right
right
after.
after
Right
9/11, because we were in the Marines together.
Yeah.
You know, and a lot of people like think they have long-term relationships with people.
We looked different when we were in the Marines.
Well, when I say the Marines, I don't go by age. I go by weight.
Yeah.
Like I was in the Marines like 100 pounds ago, 200 pounds ago. But, so like, joking about tumultuous relationships, it's like when you do have a brotherhood, you ultimately get through it, and it's like, yeah, there's a rough patch, but whatever.
But I brought that up because you're going to put the image up there. It says, we didn't promise you a rose garden.
Yeah.
And here in this show, we don't promise you rose gardens. If you're thinking about getting into investing, it's not a rose garden. We're not promising you a rose garden, but I hope to share the stuff I've done right and more of what I've done wrong, and hopefully help people avoid the latter.
Yeah, I think too many people on the internet, and I just said it, but I'll say it again, they promise, like there's some strategies being taught by friends of mine that are advanced strategies, and they act like it's like, oh, it's how you get started. Like, even like wholesaling. Wholesaling is somewhat advanced, but it's not, but it is.
Right.
But because there's no money in it, there's no money involved in it, I mean, you can make a lot, oh, that's where you start. It's like, or maybe just go buy a house, try to fix it up, lose a lot of money, and you learn a lot there.
Well, on the way here, I was listening to a Bigger Pockets guy that was on the A Game podcast, and he was talking about house hacking. And in 6 years, he's bought 12 houses. He's like, and that doesn't sound like a lot, but they're in Denver, and they've all gone up like 200%. So, I think it's different strokes for different folks. It just really feels like, what do you need or what do you want?
Real quick, just because this is like, how do you get started, define house hacking to you real quick.
I mean, to me, house hacking is, honestly, it's finding a way to make money in real estate that you didn't buy with the real estate investment loan or maybe intent.
See, and that's completely different how I receive house hacking. Because like when I hear house hacking, I think I'm going to buy a duplex, I'll live in one side, and I'll rent the other side, and that rent pays for all of it. Or I have a house and I have roommates, and those roommates pay for the whole house. Like, to me, that's house hacking.
Right.
So like but that goes to a greater point about how even in a world where we have a relationship, semantics matters, and like what's true to you may be true, not true, or definitions are wide and vast.
Yeah, I mean, like right now, a lot of people are doing pad split as a way to house hack.
I don't know what that is.
So they're renting out room by room.
Okay.
Right, and so like you have to like add a bathroom per room. One lady I know, her version of house hack is buy a house in the first phase of a new subdivision, get your buddies to move in with you. 3 years later, by the time they're on the fifth phase, your house will be worth double. And when she said that, I thought that is stupidly correct. Like it's like
you hope.
Well, yeah, a lot of investing is hope.
Right.
Aided by time. I mean,
appreciation.
Well, think about it. Like we started working together, in
2012?
12? There are houses we were buying for 40, 50,000 that are worth 300, 400,000 now. Like time does help and hurt.
Can you imagine
business.
how many $500 vacant lots that we passed up in the Fair Park area because it was a liability. $500 lots. Are you like, how stupid do you have to be to pass that up? But it wasn't stupid because back then you had the liability of druggies or whatever. Someone gets hurt, and yeah, you had a $500 investment, but now it's a $20,000, $50,000, $100,000 legal fee.
Well, I'll never forget. We were at our buddy Jason's wedding in Vegas, and he walked up. He's like, "Hey, we just bought this house for $3,000 over." I don't even remember what it was called then, but now it's called Trinity Groves. And I was like, "Really? Are you sure? That's dangerous."
Are you insane?
And Jason's like, "Dude, you just spent more than that on the last roulette roll. Like, I think we're okay getting a house for the money, right?"
So this being the first show, it's easy to go down memory lane. It's easy to start talking about house hacking and all this other stuff, but like to circle back to how do you get started. And I think the biggest thing is when it comes to getting started is realizing, as much as I hate saying, "What's your why?" because I hate that with a passion. But
I love it.
There is, you're fine. It's good. But there is some truth to that of like, because like if you're working a full-time job and you want to get in real estate or real estate investing, there is a sacrifice. There's a sacrifice of time. There's a sacrifice of money, mental, whatever.
Well-being.
Yeah. But it's like, you have to know, it's like, because like with me, I own a media company now, and people are like, "Why don't you do real estate?" I fully realize that there's way more money, way more opportunity in real estate, but I don't like hoarder houses. I don't like the smell of cat piss, and I don't like the distressed housing field. Now, there's plenty of other opportunities like with lending, with multifamily, that don't involve any of those excuses. But for me, at this stage of my life, like I own a house with Paul right now, but neither one of us has seen it.
Right.
That's the type of investing I want to do.
Right. Well, and you mentioned multifamily. Yesterday, I got an email with a capital call on one of my multifamily investments. Right. I mean, it's put another 50 grand in, or your share goes down by 20% or something like that.
I have a friend that's losing millions of dollars because the syndication deal was mismanaged.
Right.
And it's just like, but what do you do? Well, he bought another one somewhere else.
Right. So I think
it sucks.
How to get started, and I hear you about the why thing. Even though I love Simon Sinek's book, Start with Why. It's like literally the three things in the Ternus logo mean the three pillars of everybody's motivation.
Right.
But to your point, you need to really think about what you want your lifestyle to be. You need to really think about what your resources are, and you need to think about what you want your management responsibilities to be before you consider any strategy in real estate. I mean, case in point, Ryan, Jennifer and I own this $1 million house on the town square of Rockwall that would make an excellent Airbnb. I'm about to burn the house down. That's a joke. I'm not going to burn the house down. Don't tell anyone. But it's a lot of work. It's the hospitality business. So there's a lot of people out there that, I want to get into short-term rentals. It's like, that's saying you want to be a hotel operator, really and truly.
And Airbnb, short-term rentals, whatever you want to call it, they're under attack. So like, you could have been, 5 years ago making a killing, and now it's like, that's the new it thing for legislators to go after.
Right.
So, and that's one of those risks. Like the subject to guys, the owner finance guys. Years ago, they were making a killing, and all of a sudden, new sweeping regulations in Texas, and then, oh shit, we got to pivot our whole strategies. Right. So, and that just comes with the business itself. But, so when it comes to how to get started, it's having that mental place of knowing, hey, this is a career. I think that's the biggest thing is most people getting started, they don't realize, they just think it's a hobby, they think it's a thing, but it's a job, it's a career, it's a choice. And all of us want to get to the point of passive income. That's the dream, that's the goal. But the reality is when you're getting started, there ain't nothing passive about fix and flipping a house, about wholesaling, about subject to, about any of that.
Well, finding a discounted property or a distressed seller may be the most laborious thing there is on earth. And it never becomes passive. Even the biggest wholesalers in the nation, it's a full-time job to manage the business.
Well, it's not just a full-time job of managing the business. It's a full-time job of pivoting with every single market cycle, because like I would assume right now postcards would be probably a good thing. Why would I think that's good? Because the last 7 years people haven't been doing it because they've been taught that it doesn't work. So hell, if nobody's doing it, then do it. Like bandit signs were huge about 3, 4, or 5 years ago. I don't know if bandit signs are popular anymore. If they're not popular, start doing them.
Right.
So you have to pivot with the market, pivot what people aren't doing. And I think that's the hardest part about the marketing aspect when it comes to real estate investing. You know, because like Corey Thompson, we were talking about the other day, where he used to spend $20,000-$30,000 a month on marketing, and he would get 7, 8, 10 deals. Now that same $20,000-$30,000, he got him 3 deals.
Yeah.
You can't do that and stay in business, so you have to pivot.
Right. Well, and I think, if the listeners out there thinking, well, I just want to buy some rental properties, I don't want all this postcards and direct mail, like all this other stuff. I mean, then you're going to have to understand that 9 times out of 10, it's going to require cash.
Yeah.
I mean, 20% down is kind of the rule of thumb. If you're not spending, I would argue, the same 20% to generate the leads.
Well, you were just telling me something that I have never heard of. I have heard it. I'm just trying to tee him up. The 3 things to make a deal. What are the 3 things to make a deal?
The 3 things to make the deal.
Sorry, that's something else. We were talking about time, cheap, fast.
Oh, yeah. So, I mean, look, I always say when George and I used to teach the flipping thing, either way you're going to pay. You're either going to pay a premium to buy a house from someone that did all the work, or you're going to pay all this marketing cost and time to get the deal at a discount. And I think, so that's number one. And then number 2, I think specifically with marketing, with financing, with general contractors, honestly, with real estate agents, which I'm still a big fan of real estate agents, there's good, fast, and cheap.
I'm not.
There's good, fast, and cheap, and you only get 2. Good and fast won't be cheap. Good and cheap will not be fast.
The 3 things that I was thinking of, then I got confused on, was the 3 things to make a deal is you need somebody with experience, you need somebody with money, and you need somebody with time.
Oh, absolutely.
Well,
it's the old country song. If you ain't got the money, if you got the money, I got the time, right?
Isn't there honey in there somewhere?
Probably. I mean, honey. If you
got
got
the
the
money,
money, honey, I got the time. Yeah, there you go. But that's the whole point, right? Like, I've got money, and I pay people for their time.
Right.
But there's also people with more money than me that pay me for my time. I'm still a consultant for some really large hedge funds that could write a check to buy my entire net worth and would never know it was missing.
Right.
If you would like to, though, my address is no.
Those are the dream clients when obviously you want to do a good job. You always want to do a good job. At least I personally. If somebody hires me, I want to do a good job. If they're not happy, how do we mediate this to make sure they're happy? But on the other side, to be like just some random byline in somebody's like books where, hey, what's this quote? Whatever, just pay it. Like, that's the dream life. I would love to have like $100,000 a month from a client that forgot that we're a vendor.
Well,
if you want to pay me that, let's go. Hey, hell,
I'll give you send me the 100 and I'll take a little piece of it. We were talking a minute ago, just so you guys know, this show is going to be all over the place. Just stick with us. We'll get there.
I'm trying.
I think, when you and I first started messing around in this business together, technology, I'm not even sure you could have called it technology. It was very limited.
Yeah.
Well, now...
Matt, just to interrupt, because the early 2000s, the 3 things you needed was a Mapsco, a hammer, and a flashlight.
Yeah.
And maybe a gun.
Or a pin.
Pin?
That you could use as a gun. Pin gun. And sign contracts.
I
mean, there was no digital signatures. There was even MLS was complicated. And you look at where we are now, and I think someone getting started can really skip a lot of the errors and challenges we had by doing research. And research sounds boring. Do your own due diligence. Sounds boring, but Dallas, for instance, Jennifer and I are considering selling all of our houses because they don't really cash flow anymore. Property taxes are so high, insurance is so high, and prices are so high, it is very difficult to cash flow on a house.
I won't say his name, but I was talking to an investor in somewhere in DFW who owns a ton of rentals, and he was the single family rental guy.
Yeah.
And we were talking. He's like, I think I'm done. I think I'm gonna sell my portfolio and shift over to like storage units because of property taxes.
Right.
And because renters and all that is just such a hassle, and it's getting out of control.
But if you don't have that yet, I guess what I was trying to say is,
sorry,
I go to all these masterminds, and like Kansas City, Missouri, it's fairly easy to buy a house for full price on MLS right now, put 20% down and cash flow, right? Places in Ohio, Indiana, where a lot of those new chip plants are going, it's fairly easy to buy a house at not much of a discount in cash flow.
So I think that requires foresight, because I think if you go on the internet when it comes to real estate investing, buy low, sell high, and you're always looking for a deal. And like, because that makes sense to me, because you're like, hey, we're not playing in the 30, 60, 90-day turnaround. We're talking 10-year, 20-year, 30-year turnarounds.
Yeah, it's where the jobs are too, right? Like, and not just where the jobs are, where large amounts of new jobs are being created. And like as a percent. Now, I don't mean to get geeky, and you know I can, but like in Columbus, there was no new Ohio. There was no new real industry for like 10 years. Then all of a sudden, this new CHIPS Act, and there's like, I mean, my buddy Terry Summers up there was like, the number of job openings literally doubled in like 6 months. It's just huge, and it's drawing people in. Well, you know, the thing about people, my buddy Rick Sharga says, they did an extensive survey, and most people prefer to live indoors. So, I mean, if there's no housing, or if people need housing and they can't afford it, maybe they're starting a new job, that's where you want to be a housing provider.
Quick tangent that has nothing to do with this, and I will take only 30 seconds. If you're interested in chips at all, there's a really good book called Chip Wars. I think that's the name of the book. But it's basically why chips were in Japan, why chips were in like Taiwan. And it's a fascinating book, and the main reason it was in Taiwan was because Taiwan, after Vietnam, they realized, oh, United States is not bailing us out just because they want to help us out. We got to make an infrastructure that they have to depend on us, that if China comes in, they'll help us out. So Chip Wars, hopefully that was 30 seconds. Great book. I think you would actually like it a lot.
But look, it goes back to your why. If you're buying for cash flow, so many investors want to buy in their backyard because that's the area they're familiar with. It's where they're comfortable. Well, but if you want to buy in your backyard and you want to cash flow, but the properties there don't cash flow, you got to know that up front.
But let's loop it back to technology, because pre-technology, the rule was if you're going to own a house to flip or rent, it needed to be in that 30-mile bubble, that 30-mile radius.
Right.
Because if you need to check on a project, check on a house, maybe not rentals, but at least fix and flips, you need to be able to access it. But now with technology, you can put up a webcam that you have 24-hour surveillance of that thing. So you can buy in Kansas City. You can buy in Hawaii. You can buy all over the country because you have to access through technology. Whereas 10, 20 years ago, you didn't.
Well, look, I mean, at Ternus, we make lending decisions in an hour because we just look at your comps. We run our own comps. We look at your pictures. We geotag the pictures. We can pretty quickly, and we look at your renovation budget, and we run it through our own calculator that's online, and we really quickly get comfortable with the deal as if we were going to buy it ourselves.
But we also live in an era of social media that even if you didn't have that, you could throw a Facebook post, hey, I'll pay somebody $50 to
I
go
need
over
boots
here.
on the ground.
Go look at this property real quick. And you know somebody would do it.
Right.
And so it's just...
Especially with all the buyer's agents out of work.
So I think a lot of this, and I think this is a roundabout way of saying, when people don't do real estate or it's too hard, it's a bunch of excuses. Like when I was saying earlier about why I don't do real estate, I freely admit it's excuses.
Right.
You know, but for somebody trying to get started, looping it back, you know, is, hey, the only thing holding you back is your own excuses. Because the reality is, if you know you're a hard worker and you know I wouldn't even say smart, because some of the stupidest people I know are incredibly successful in real estate. No, I'm just kidding. No, but it's just because it's a business that rewards work. It rewards the sweat.
But you got to be careful. If you end up in the wrong room, someone may be pitching or discussing a one-size-fits-all strategy.
Of course. Yeah.
And that one, like, wholesaling is not for everyone. Like, if you've got $5 million in the bank, you should not be a wholesaler to start, right? Like, you should get up and leave that seminar the minute it starts.
Right.
Conversely, if you got $5 in the bank,
you don't need to be at a multifamily conference.
Right. Or maybe you shouldn't even wholesale. You need to save some more money because they're lying to you.
Right, because everybody likes to say wholesaling is where you go when you don't need any money. Kinda. Because you still need money for gas if you want to drive for dollars. You still need money for bandit signs. You still need money to be able to knock on doors.
Earnest money.
All of it.
Business card. Like, anyway. So I think maybe we put a pin in this. I hate to say it like that. But if you want to get started, you've got to make sure you understand your capabilities and your desires.
I got skewered alive about what I'm about to say many years ago. Because what I used to say, and I think it's something we used to talk about, is if you really want to get started in real estate and you don't know where to start, find yourself a Tim Herriage. Find yourself an established real estate investor and be like, look, I want to work for you for free.
I disagree on the free part.
Okay.
Because free just sounds like this, like, leech that's going to just always be wanting things.
From the free guy or the employer guy?
As the employer.
Okay.
Right. You said to find a Tim Herriage. If someone offered me to work for me for free, which they do all the time, I say no.
Okay.
But if someone says, hey, what can I come do at your company to add value that you need help with? Right. Like, but they're clear. Like, I don't care if it's the bottom rung position.
Right.
Like, I'll get your coffee.
So we're saying the same thing, just different deliveries.
Yeah.
Right. Like, but the point being is find somebody that you can go learn from.
Absolutely.
Because like people, I have 50,000. Like Rich Dad Poor Dad is notorious for this. I have $50,000. Oh, well, what you need to do is join our mentorship program so we can teach you how to do it. If you have $50,000, go buy a house, fail miserably, and I guarantee you're going to learn more in that failure than you would ever know
5X.
in one of those classes. And you know what? You're probably still going to break even or so. And maybe you do lose 10, maybe you lose 20. Guess what? You still are ahead than if you would have given like Rich.
You got 30 grand more than if you'd have given him 50.
That's what I'm saying. So like masterminds are great once you understand the language. If you don't understand the language yet, do not pay somebody else money for mentorship. Do not pay somebody much. Pay for training, pay for masterminds, pay for mentorship once you understand a base level language. If you don't understand how, if you can't tell that somebody's is screwing you over and is full of shit, that you're not ready to pay somebody for information.
Right.
That's my opinion.
And also pay for services, right? I mean, if you want to get into, say, fix and flipping, and let's just say that you're going to buy it from a big box wholesaler or someone like that, like New West, Net Worth, etc. I see it all the time. New investors, all of a sudden, they want to try to be the general contractor to save a little bit of money.
Yeah.
And it's like, dude, you can't even change the light bulbs in your own damn house.
Right.
Why are you trying to just tell the foundation guy what to do?
So I have a saying at my company, and this probably should not translate into the real estate world.
Probably does, though.
Paul, what's the saying I say all the time when it comes to equipment? Paul?
Paul's taking a nap. 1 second.
What do I always say when it comes to purchasing the equipment?
Buy the expensive shit.
I thought you were going to say, don't use my Amex.
No, because
That too.
like when it, say lighting, like and I don't know if this analogy translates, but I'm going to go with it anyway. When it comes to lighting, we have multi-$1,000 lighting. Like for a singular light, hey, $4 or $5 grand. When I first started, $50, because like that's insane. Nobody would ever buy that. And then it's like, okay, well, this light sucks. Let me buy the next one, $100. And then long story short, you have $2,000, $3,000, $4,000 worth of lights you're never going to use again because they're full, they're shit, they're crap.
Right.
And you ended up buying the thing anyway. So just skip all that and just buy the thing, just buy the expensive thing.
Right.
Now, I don't know how that would translate to real estate, but I think in this context is just pay for the service.
Well, here's what happens with new people. A very common example. The plumber says it's going to be $3,000. They think that's ridiculous. They spend 3 weeks finding some moron at Home Depot that will finally do the job. They do it wrong twice. They finally get it done right. It's been 5 weeks. They saved $1,500, but they spent $2,000 in interest, taxes, insurance, utilities, and lawn care.
Right.
Right. So, and all their other subcontractors are off busy.
Break that down because you went real quick on
I'm
that.
sorry.
Because I know what you're saying.
Well, so
but-
you save $1,500 in cost on that line item.
But the 2 weeks.
But the 2 or 3 weeks extra
Right.
cost you your carry cost. And
yeah.
if you're new in flipping, you don't know. A buddy of mine, Roddy, we'll have him on the show for sure. He calls it's a Gantt chart. It's like a detailed project management thing. You probably use it in media production, but it's basically every time one little thing moves, everything else moves, and it shows you how it like extends your life cycle. And when you make these little decisions to save money, but you sacrifice time, that time oftentimes is more expensive than the what you saved.
Well, it's the whole like anecdote. Time is money. It's easy to see that on TV and movies, but it's so real when it comes to real estate, because especially investing. Because like that's why if you close a deal on at 8 or 9 or 10 o'clock in the morning, if you have your stuff together, your team is already there clearing out the house. Your team is already there doing demo. And a lot of people are like, wow, that's quick. It's like, yeah, because like every minute I own this house, I'm paying carry costs. I'm paying a lender. I'm paying taxes.
Well, look, we do these loans on these fix and flip loans, and I love it when a borrower's asking me on a Friday, like, are you sure you're funding it today? Because my guys are ready to go.
Yeah.
Like, by the way, just so you know, as a lender, that gives me great comfort, right? Because I know, oh my gosh, this guy's going to knock it out, or girl, whatever, is going to knock it out and get it done and get it sold. I probably don't need to worry about this one.
Well, if I'm a lender or if I'm an investor, the last thing I want to see is if let me go check up on 123 Main Street and there's nobody there working. That would, I mean, I know that kills you. It would kill me. But
the air conditioner's always set to 60.
Right. But it's just like, because again, it goes back to that realization that time is money, and because if I'm paying you as a lender, it doesn't matter that it's a Monday, a Friday, or Saturday, or Sunday. You're still going to get paid that whatever dollar amount is for that daily rate. I mean, obviously it's not a daily rate, but whatever, month to month.
What it is, though, you and I would talk about this a lot. You got to figure out your kind of per diem cost on a deal if you're going to flip or own vacant houses, period. Right? So if you take your monthly interest payment, divide by 30 days in a month, that'll tell you kind of your daily interest. If you take your annual taxes and divide by 365, that'll give you your daily tax. And you can do that with your utilities and your average utility bill and your insurance costs and all that. And what you'll find is normally here like DFW, I've always found it's like $110 to $150 a day is like the true cost of having a vacant home that isn't, well, period, just a vacant home, right? Now, look, I'm not saying that you need to make stupid decisions in order to save a day,
Right.
but you really do need to understand the cost of a week.
Yeah. And that's the thing is like, we have a buddy who has a really cool house with a really cool backyard, so you know who I'm talking about. He's had so many properties that sometimes he's forgotten that he owns a property. And it just sits there. And then it's not until his accountant's like, hey, what's this? He's like, oh, shit, I forgot about that one. Good problem to have in the long run. But if you think about it, having a vacant property, that just eats away. Yeah. It's like, but I think for him, ultimately, it paid off because DFW appreciation's so crazy.
Yeah, I mean, look, there was some profitable procrastination in the last 3 or 4 years,
right.
But that's not the norm and definitely not a strategy.
Right.
You said time is money.
Yeah.
So time is money also when you're considering like investment strategies, time is money both ways, right? A vacant home, time is lost money. An occupied home that's producing income, it's in the plus column, right? Now you're paying your bills with someone else's money. The house, you should be making cash flow. The house is going up in value, right? Like in general, there may be a down period or whatever. I don't get into that, but time is undefeated in real estate.
Yeah.
And if you just get the house performing as an income-producing property and give it time, I mean, I won't say it always works out, but it's pretty reliable.
I would say yes. Yes, but there are hiccups along the way. Time is undefeated, but if you don't buy correctly, you could be having a lot of kicks to the pants along the way. Because, like, I know, this is probably so long ago you don't care that you share your faults or mistakes. Whatever.
I love to share my
But
mistakes.
like one of the mistakes you used to make in the early 2013s, or actually you made them before we started working together, was if something didn't wholesale, you just kept it and turned it into rental because you're like, well, I don't want to lose money, and ultimately that ended up kicking your ass.
Oh, absolutely.
But if Tom, I don't know where that came from, but if you were able to hold on to it long enough, you would have been undefeated. But that's what I'm saying is, yes, time is undefeated if you have the runway to sustain the tumultuous times.
But Ron, all right, so you've done hundreds of events. You've produced God knows how many podcasts and all this.
Right.
That's a lot to try to figure out if you're new.
Yeah.
And we're not trying to scare you out of investing in real estate.
No.
But let's break this down maybe into 4 to 6 things that we think people should do if they want, and not just get started. If they're new or getting started, like, where should we kind of like dial them in at?
I think this is a Jason Riney quote, maybe paraphrase, and it's the minute you want to, and I use it for real estate or for events as well. The minute you decide that you're a real estate investor, you're a real estate investor. There's no like certificate. There's no proving ground that you're a real estate investor. So when you're on Facebook, I'm looking to buy houses. When you're at the grocery store, I'm looking to buy houses. When you're at your quinceañera, whatever, I don't know what those are, but I'm sure they're
fun.
They're fun. I'm looking to buy houses. And that's the thing. That's one of the biggest pet peeves real estate agents have is when their best friend uses somebody else to list a house. And it's like, well, did you tell them that you're a realtor? Well, they know. But did you tell them every day? Because they probably just forgot.
So step 1 is be vocal about your desires or aspirations.
But more than vocal, I mean vocal. Like a mutual friend of ours, Pat Hilton, amazing at being vocal. I'm not saying we all have to be that extreme, but we need to be thinking in terms of that's how loud we need to be for a message to get across.
Right.
Because like even in my media company where I've made a mistake is like I'm not that vocal. Like, hey, I do video production, and that's just transparency. That's hurt us in the past 6 months because we had a couple good deals and they were in, but I wasn't looking at building new business.
It's funny you said it because I bought a lot of houses in the last year or so from friends of mine from like high school because now we're all in our 40s, which means that our parents are in their 60s or 70s, and people die, people have to go to nursing homes. Our grandparents are definitely dead or dying, and I can actually help their family through a hard time and make money doing it.
But you've been vocal for the last 20 years on Facebook.
Not enough. I mean, I'm listening to you. Even as an old dog, I'm listening to you. Like, I need to post more reminders of, hey, if you know anyone struggling with real estate or that needs help, call me.
I had my dad. I took my parents to dinner for Mother's Day, and my dad was like, "I've noticed you're posting more about media." My dad, who like I don't even know you have a Facebook, so
Your mom shows
alone,
it to him at night.
Yeah, that alone validates what I'm just saying. So I think step 1 is be vocal about your intentions. Be vocal about this is the direction you're trying to go with everyone.
So step 1, go shout it from the mountain.
Yeah.
Step 2,
marketing. You never turn off marketing. I think and this is probably paired with being vocal, is like being out there and like throwing your name out there and because if you don't have any deals, you're not in real estate. Right. And like you said earlier, you got to have deal flow. And the only way to get deal flow is, and when I say marketing, that's a whole series of episodes. But whether that be door knocking, whether that be advertising, whether that be doing a paid commercial, I know a guy that can help you out with that.
And that was not a paid commercial.
Yeah, social media, print ads, classified ads, billboards, all that is paid marketing.
You
And
said classified ads.
people still have classifieds, don't they?
Oh my gosh. That used to be a thing. Go to the green sheet.
That's what I'm saying. And this goes back to that pivot. That's probably a strategy. It's like, oh shit, maybe if nobody else is doing that, maybe
Look,
I
all
should
the
do
old
that.
dogs still run their newspaper ads.
Right.
I mean, Juanita, Eileen, Bill, all the old dogs still run their newspaper
I think
ads.
marketing is huge.
Yeah.
So what do you think is another? And these are not in order, obviously.
No, I mean, I think, look, accounting is boring. Math, I like it, but isn't fun.
You like it when it's positive.
Yeah, but you've got to get a good handle on kind of your runway. You talked about a runway earlier, right? You really have to have a plan. And I was talking to someone the other day. Like a business plan, people used to think about like a big Word document that you typed everything out. A business plan that I think people really need is like, how much money do I have? How much am I spending? And how long will that last? Because I think a new person that was starting with marketing would be better off spending $500 a month consistently for a year than, which is $6,000, than spending $3,000 a month for 2 months. Because I got a text when we got here. We just bought a house and Shelby and them sold it. It's like a $35,000 assignment, but it was from February's mail, right? And that was mail that I paid for in December. So when you think about it was May that we're recording this, that's 5-6 months have gone by. And what I think too many people do with a lack of a plan is they try to overspend at the beginning, and then they get sour grapes and kind of give up. This shit doesn't work. And next thing you know, they don't even answer their phone when that person calls that could make them 35 G's.
Right.
So I think my number one thing would be to have a plan. But my number two thing, and this is, I'm not Tony Robbins.
So let me pause
Okay,
you on
yeah,
that.
take me back.
Because you say have a plan. What does that mean?
Well, mine is a
'Cause
financial plan.
yeah,
Like you need
okay.
to figure out how much money you have, and every time you decide to spend it, you need to I'd build a little Excel spreadsheet or Google Sheet or whatever, and just I have $5,000. I'm gonna spend $250 a month, and I'd
Right.
make it go out. You gotta have a budget, because you'll go over budget or you'll run out of money, and then you're out of business.
I think, and on that, just another anecdotal story. I met an investor interesting enough, at a Pace Morby and Jameel event a couple years ago. They were in town, and this investor had just done his first deal, and he was making like minimum wage. He was only making like 30 or 40 grand or something small, in his day-to-day job. But it
You're
was
so condescending. No, I'm just kidding.
I would love to make 30, 40. No,
I'm
But
an
he was-
entrepreneur. I'm broke.
Yeah. No, but he was making enough to survive and pay for his mother or whatever his situation was. But he just closed his first deal that gave him about 4 months worth of the same income he would have had at that job. And he would just kept on talking about how this is what he wants to do, this is what he wants to do, this is what he wants to do. And I flat out said, and this is not advice to anybody else, but for his situation, I said, you mean to tell me you have 4 to 6 months worth of runway right now from that deal you just closed, and that just proved to you that you can do this business, and the only thing holding you back for doing more of that is that job that you're working full time and it's making you tired and you're not able to pursue this other stuff. Instead of blowing all that money on he was never going to blow it, but like buying a car or buying this, why not just roll that into you in your business and give yourself 3 to 4 months of fighting chance to have a go at that?
Or let me say this another way.
Time out.
Okay.
Fast forward a year and a half, I met him, and he's a successful real estate investor, and he goes, thank you, man. I took that advice, I jumped off the cliff, and I'm killing it. And I'm like, that's badass. Yeah.
But also, one of the things I tell people, number one, that don't go out and buy a car. I've said that 100 times. But like, you got to be honest with yourself too, right? If it took you 6 months to make 30 grand, you do not make 30 grand a month now.
Right.
Right? Like you've earned $5 grand a month, right? But if you spend $1,000 a month to get there, right? Now you're down to 24 divided by, right? I mean, you're at $4,000 a month. So I only say that like goes back to me and my spreadsheet. You got to learn to be honest with yourself about how much you're making, because we've all done it. We have these months where, especially in this business, one of my consulting clients, big flipper up in Buffalo, I mean, brought in like $700,000 in cash in March. And, you know, he was like, yeah, but that's not all mine. I go, what do you mean? He goes, well, I mean, I've been like, I was in the red in January. I was in the red in February. Like, he was thinking about it right. So just, yes, jump off the cliff, but like, make sure you have a plan, because you're not going to be able to count on 30 or 40 G's a month just because you're going straight into it.
And to clarify, what I was saying was he wasn't going to get that a month. I was like, but you just need one more of these in the next 3 to 6 months.
Right. Without changing your lifestyle.
Without changing your lifestyle. If anything, maybe pull back on your lifestyle a bit. And that made sense to him. Because again, anybody saying, oh, you're going to get it, you know, you're going to get 2 to 3 deals right off the bat, they're lying. If you can get a deal in your first 6 months, that's a success, in my opinion.
So shout it from the mountain.
Yeah.
Marketing.
Yeah.
Plan. My next one is action. And this is, you know, mindset, Tony Robbins crap. But I was on another guy's community call the other day, and this lady was complaining, you know, I've got to figure this out. I've been doing this for blah, blah, blah. I was like, look, go make 100 offers. And I told her on this call, I said, you make 100 offers and you don't get a contract, I'll give you $1,000. And this was, there's a bunch of people on there like, is that a bet, Tim? That's not a bet. It's just, if you're really following, this was Ryan's system, and you make 100 offers that he agrees with, I'm sorry, I just believe there's zero way that you're not going to get a contract. And so the saying that I've become a really big fan of is, don't sacrifice good enough for perfect. Like, if your idea, if your plan, if your marketing, if your budget, if your belief or understanding of what you want to buy or offer is good enough, go ahead. Don't wait for it to be perfect, because I got news for you. I mean, perfect just never comes along.
Well, there's 2 things to that. Is one, the 100 offer thing. That was a big Homevestors lesson. Is like, hey, you just joined Homevestors, great. You need to get into 100 doors as fast as possible. Now, make an offer on everyone, sure, but at least walk 100 houses as quickly as possible. When it comes to the jump off a cliff and you know, perfect versus good enough, I think that's where you and I both are very similar, to where, because I think I learned this expression from you, which is the whole, by the time you got to perfect, I've already done it 10 times.
Right.
And
it was good enough.
and maybe yours is better, but the amount of time, effort, and money you spent to get yours perfect, and mine, I've done it 10 times, and 7 out of those 10 are at that 80 to 90% as good as yours. I mean, what's better?
Yeah.
You know, having one or having multiples that still work.
So when I say take action, I'm not saying go out and be an idiot. I'm just saying get a good level set of understanding, get a good level set of plan, get some marketing or advertising in place, and get started.
Yeah. And on that, it comes with going to events, meeting people, watching videos, studying, looking at how to comp deals. Again, don't pay anybody until you know the language.
Can I talk about events?
Yeah.
Sidebar. You and I have done a lot of events together. You've done a lot more events than I've done since we stopped doing them together. But one of my pet peeves is people that go to these networking events or conferences or whatever, and they have no plan. I'm all about like they're just wandering around, grabbing a cup of coffee, and they talk to everybody they've already known, and they stand there and do nothing. Like, you've seen me. I'm an executioner at an event.
I've got a new expression that you may or may not have heard of, but it's the mental masturbation. Because that's what it is.
Yeah.
You're going to these events, and you're like, I'm a real estate investor. It's like, I'm glad that you're here and you're networking, but it's kind of, it pairs nicely with the analysis paralysis.
Yeah.
Because that's what it is like you're stroking your ego, you're stroking your mental brains of like, oh, I'm doing it. But how many houses did you walk? How many offers did you make?
Well, but no, like, so I flew to Miami in March for the National Private Lenders Association meeting for 2 reasons. One, I just started Ternus, and I kind of wanted to show off a little. but network, let people know what I was doing. But two, John Beecham at Turok Capital had just done the first big securitization of fix and flip loans. And he was going to be giving a big speech about it at 10 a.m. on Friday or whatever it was. I got on a 6 a.m. flight, flew to Miami, got there 10 minutes before the panel started. I went in and sat in that panel. I listened to every word. I took a picture of every screen. I was texting them to my partners. The minute his panel was over, I got up. I walked the trade show floor. I went to every single booth. The people that I knew I wanted to follow up with, but I didn't want to take the time to talk to, I grabbed their flyer, handed them my card, said, we need to talk. Can you call me next week? And then I'd go on and go on and go on. And I'm telling you, the amount, we literally, this is 2 months later, have done $5 million in loans from with capital providers that I met at that conference. And I don't think I talked to a single person longer than 10 minutes and before I'd move on.
I think that goes into maybe not the next point, but a good point, which would be recognizing opportunity.
Okay.
Because
well, let's make that number 5. Recognize opportunity.
So because you take action, but it's like, oh, I've got this opportunity over here. I probably should jump at it. Because too often people, analysis paralysis, they have risk. Oh, it's a 6 a.m. flight. Oh, I don't know anybody. I don't have any meetings scheduled. I
flew back that night.
Right. But I'm just saying, people have this way of being able to talk themselves out of an opportunity because it's not a full rose garden.
Yeah.
And it's like you make the opportunity what you will. Because you could have flown out there and not talked to anybody. Yeah, you got some screenshots of a pitch deck, but you wouldn't have $5 million in deals.
Mm-mm.
That comes from the opportunity of, hey, I'm here. Let me go talk to these people. Going back to the events. If I go to a networking event, people it drives me insane. Hey, what's your name? And this is kind of exactly what you just did, but it is different. If I'm at a networking event, in my mind, you're trying to meet and have 2 to 3 quality conversations. Your situation is different because I'm bam, bam, bam.
Yeah.
But most people, that's not what they need. They need to get 2 to 3 quality conversations.
Well, but you got to understand which So I completely agree. By the way, so the lenders, the capital providers I've done business with were the longer conversations.
Right.
But I knew I needed a document preparation software, but I knew that's an hour-long demo. And I'm not going to stand on the trade show floor and do the demo at your booth. I'm just not.
Right.
But here's my card. I'm serious. I'm going to be picking a dock engine in the next 2 weeks. Please call me.
Right.
Now, that salesperson and I take great value in having met you and shook your hand. I'm going to remember you. You're going to remember me. And I've asked you to call me. You don't call me the next week,
we're done.
I'm probably going to go with the other dock engine that called me.
Right.
But so I agree. But don't get stuck in those 2 to 3 quality conversations where you don't see those other opportunities that are floating around.
Well, and that goes, if we're going number 6, is recognize when, what is it, energy vampires. Because at those same
mental
events.
masturbation and energy vampires.
Have you never heard these before?
I have, but it's been a long time.
Yeah, but you go to these events and it's like people, especially if you're on the internet and you're known and people know you've done deals, they want to suck you dry of all the information. And it's like, that's fine. That's the trade-off. But at the same time there also have to be a trade-off in this conversation. Am I getting what value we bring to me? So if you're new to the business, you can't come to a Tim Herriage and be like, let me leech. It's like, what value can I bring you? Like, what can I bring the easiest way I would do it with the Tim Herriage is I would go find some Marine Corps memorabilia and go to an event that I know he's at and be like, hey, Tim, I know I've never met you before, but I knew you were in the Marines. I found this as a garage sale. I just want to give it to you. I guarantee you Tim's going to bend over backwards to do business with you. Same thing with anybody else. And it's not that hard to find what people are into.
Well,
and I'm not saying do that with everybody, but do that with somebody you specifically want to meet and you're going to a network event where there's competition to meet that person.
When I talked about technology, and I don't know if you have this, I use the Blink card.
Mm-hmm.
The thing I like about the Blink card is, number one, you can just let them scan it. But number two, if they put their name and email in there, it says, send me your card. It goes into a contact database. And by the day that I can tell when they put it in there, I know where I met you at. And I can have my marketing team kind of download that for me. And so for me, this is part of my event strategy. Because if I can meet as many people, great, here's my card. There's a link to my calendar to schedule a call. Scan that and let's talk. Well, I'm creating follow-up action intentionally. It's very intentional, right? So if you aren't going to have those if you don't like know what you're trying to accomplish and you're not going to be like networker on steroids, then you need to find 2 or 3 conversations that have a potential to satisfy a need in your business, not just a bunch of shooting the shit.
And on that note, and I don't want to be the asshole here, but like, you should always treat everyone. You never know who you're going to meet. You never know. The guy that looks homeless could be the richest guy in the room. The guy that looks homeless, they could be the guy that changes your life overnight. So you got to be able to recognize opportunity, going back to what we were saying before, but also recognize the energy vampires. And you treat everybody with respect, but the minute you're able to, like, you get a vibe on something, be respectful, move on to the next thing. But also, don't be an idiot. Like, years ago, I was at a...
Don't be an idiot.
Yeah, that's my only tip. No, but I was at a Kristen Gerst event, REI Social in Madison, and this guy was talking, and this is like in the heyday of Propelio, where like I literally could introduce anybody to anybody.
Yeah.
And literally I was talking to this guy, and I was like, yeah, let's connect. Da, da, da. And he's like, oh, here's my office number, and I'm like, never mind. Like, and I don't want to be like a big dog, asshole, but it's like, if I've got my phone out and we're about to exchange our cell phones, don't give me your assistant's phone number. Don't give me, like, because you're trying to big dog me. I don't know who you are. And maybe he could have been a guy, but I don't care. Like, we're equal footing here. Like,
I'll put it like this. When I met the billionaire, when I got off the stage at that 5-star in 2013, he gave me his cell phone number.
Yeah.
I mean, put me on a plane a couple days later, too,
Yeah.
I think, though, all right, so shout it from the mountain, marketing, plan, action,
opportunity.
Recognize opportunity.
Yeah.
Is the energy vampire part of beware part of that opportunity thing?
Sure.
Yeah. So just it's kind
we're
of
just rambling.
It's a subset of the subset of the subset. I'm going to say this. I'm going to come up with one more, and then if you got another one, you can.
I mean, we got like 20 more, but we'll go.
Yeah. Well, I'm trying to bullet it down.
Yeah.
I think the last thing.
A 5-part bullet separated by 17 sub bullets.
There's a chapter in each bullet
with referrals to other tangents. Anyway, sorry.
I think the biggest thing that you can do as a new anything is you have to be honest with yourself and have self-reflection. I'm doing that thing where I look angry because I'm being serious.
I'm watching. I got you.
I think, that the man in the mirror, I say this a lot, like, you've got to be honest with yourself. If you feel like you're not getting anywhere, stop. Do something else. If you feel like maybe rentals aren't for you or wholesaling's not for you, like, listen to what God is saying to you. I feel like you fell in love with media. People don't know. The REI Expo at the Grapevine Lodge in 2014, you were like, dude, I'm going to set up this stage and we're going to do interviews with all the speakers. Like, if we had bottled that shit up, like, it would have been like the
first on YouTube. If YouTube was a thing in 2014,
but no, like, you found your calling, like, and you're honest with yourself. You're like, I understand real estate. I get real estate. You get it more than probably 95% of people out there, but you don't like it. It's not for you. It's not what you want to spend your time doing. So I think the last thing for someone new is realize if you're getting this feeling like maybe wholesaling's not for me, probably ain't. If you're thinking fix and flipping ain't for me, it probably ain't. Rentals ain't for me, probably ain't. There's other ways to be in real estate and real estate investing other than just doing what the damn seminar guru says.
But on that note, I agree with what you're saying, but there's always going to be hurdles. There's always going to be challenges. And if you have to recognize, is this just a minor hurdle? Is this just a minor challenge? Or is this God telling me, what the hell are you doing? Because the reality is, a lot of times in that journey, a small pivot can change everything.
Yeah.
A small pivot on marketing can change everything. Hell, even in my business, going back to marketing, I've 4 years into this company, I never marketed. How stupid am I? Like, that's one of the first laws.
That's why he said it first and second, folks.
Yeah, but that's the first rule of real estate is you never turn off your marketing.
Right.
Because one of the biggest, and this goes back to, mistakes people make is one of the biggest mistakes people make in real estate investing is they spend all their money on marketing and then they get a shit ton of deals and they're like, okay, let me turn off the faucet because I need to work these deals. And then they fix them, they flip them, they sell them. And then they get on the other end of it and they're like, oh shit, I ain't got no more deals. And then they turn the marketing on, but guess what? There's a pipeline. It's going to take 3 to 6 months for those to get going. Because the example you gave earlier, hey, we spent money in December. We got the call in February.
Closed them or sold it, bought it. Got the call in February, bought it, and signed the contract in April, closed in May.
But that's a 6-month turnaround for money. On something that anyway, my point being is you can't turn off the pipeline. So, and that's a lesson, whether you're in real estate or media or whatever business you are in, the lesson is you can't turn off the market.
I guess what I'm saying though, and man, I hear you. I used to love to buy houses. Like when I first started doing this,
yeah.
I mean, it was an adrenaline shot. To go to these houses that smelled like cat piss and smoke, and I mean, a hoarder house, abandoned, vacant, boarded up. Like to get that deal done, dude, there was nothing better. I loved it.
Do you remember that house?
I fucking hate it now, Ryan.
I hear you. Is it? I don't. It's not San Angelo. It's not San. It might have been San Paulo.
San Paulo, the shit on the walls. That's on YouTube.
Is it?
Yeah, it just horribly done.
It is the reason I remember this house. If you remember it. We couldn't. There was like a dead animal smell, and we kills the walls, we kills the floor. We did the osmosis ozone machine. Still couldn't figure it out. Finally, there was a dead cat in one of the air ducts.
Yeah,
and that's what the smell was. But it's just like, how much money did we spend on all that other stuff?
We tried everything. Oh, and it was even the rehab was all the way done. Remember when we finally figured out what it was?
Right. But again, it's like you have to love that process. Like I have a strong nose. I don't like that. I like the money. I like the finished effect, but I don't necessarily care about the before, the middle, the after.
Right.
I like the after. If you like that, good. But to your point of, if you don't like it, if that's not your calling, that's fine. Real estate is a huge landscape. There's a lot there. It's 2 words, but I mean, you can lend money. You could find money for other people. You could wholesale deals. You could do market. There's so much under it. You don't have to find one thing. You can find something you like.
Yeah, and I guess what I'm saying is just be honest with yourself in that if you're starting to feel like something may not be for you, listen to yourself. But also, even if it is for you, what Ryan said, watch the tapes, like go back and be like, did I do that right? Like, how can I get better? So I think that we'll just bundle all that. Like, be honest with yourself, have self-reflection, be willing to change, be willing to reinvest your energy and time to improve your skill set, and be open to maybe you need to move to a different area, especially as you're first getting started, right? Because someone may think, no, I want to do that wholesaling thing. I'll make $300,000 a year, $30,000 a month, blah, blah, blah. It just may not be right for you, and be open to that. It doesn't make you a failure. It makes you like enlightened.
And I don't know if this is a point, but this is definitely something to be aware of. There are snakes on this plane. There are snakes on the plane of real estate. And what I mean by that is if somebody is trying to get money from you, figure out why. Why are you trying to get my money? Because the reality is hey bro, hey man, hey brother, whoa. What is the next question, where's my credit card?
What's up, buddy?
Yeah, like real real estate investors don't want your money. They want to make money together on a deal.
Yeah.
They're never really asking for money from you. So if somebody's asking for money, there should never be a transaction of me to pay Tim for real estate. If I'm doing real estate with him, it's maybe we're doing a joint fund at the title company, or obviously there's different things and different things.
More sub bullets.
Right. But my overall point is there are nefarious people in this world that will try to screw you over, especially in this niche of real estate investing. And that's why I'm very passionate about be careful of who you give your money to. Period.
No, yeah, I mean, look, at the end of the day, I will say this business has turned me into the Marine who couldn't buy dinner to, I mean, my family's very wealthy and I love the business.
Yeah.
And I think it's worth it. And I think, if we haven't scared you off, it's not as easy as the stage celebrities make it seem. The failure rate is high, but the rewards are even higher.
Yeah, and that's not my intention. I don't necessarily want to scare people, but I think there's so much fluff out there. Like, there needs to be some, come to Jesus reality out there. And yes, clearly you could be successful. Clearly you could make a ton of money. It is life-changing. It's the generational wealth thing. People talk about it all the time. If you want to make real money, real estate. Rockefeller, all these guys, they made money making cars, doing steel mills, doing trains. But where they make the real money? They bought a shit ton of America.
Right.
So real estate's always going to be number one.
So let's recap our list.
I know.
Shout it from the mountain, marketing or advertising. Marketing. So
Advertising, marketing, same thing.
I lost it. Shout it from the mountain, marketing,
Action. Opportunity.
Looking for recognizing opportunity.
Plan.
Oh, plan was first, and then, damn it,
There's
Ryan.
There's not an order.
Oh, there's not an order, right? So, shout it from the mountain, marketing, action, plan, recognize opportunities, and I'm going to say reflection.
There you go. The reality is, this has been a conversation that's been kind of all over the place. Future conversations, maybe they're the same, but maybe they're worthwhile. The reality is, we're two dudes talking about, this isn't rehearsed. We don't have a bullet point up there. Maybe we should in the next one. But
I don't think so, because we're real investors and
for the everyday investor,
and we're everyday people. Like,
yeah.
I joined the Marine Corps because I had nothing going on in my life. I mean, I don't know why you joined, but
honor, courage, commitment, all that stuff.
Oh my God,
Boy Scout.
But look, I mean, this is a cool business that anyone can get into and anyone can succeed in. It's just not easy, and that's all we're trying to convey.
Right, but it's very rewarding.
Right.
Yeah, I would agree with that.
I appreciate you agreeing to be my co-host.
Thank you.
And my producer.
Thank you.
And my honesty meter.
Well, it's too easy to agree. And it's because there's been several times I've yes and or kind of disagreed. I don't want to invalidate opinion, but there's times I'm like,
yeah.
But it's just like, whatever.
Well, we've been doing that shit for 20 years.
Exactly.
So we'll have some guests on in the future.
Yeah.
We're here at the Harper Belmont studio in Richardson, Texas.
Yeah.
I think we're gonna do this on YouTube. Yes.
YouTube. Yeah.
Yeah. And the podcast stuff, or no?
Yeah. What do you mean, like audio?
Yeah, the Spotify almost said.
Spotify? Yeah.
New platform coming soon.
Yeah. Speaking of, remember the stuff that nobody cares about?
Yeah.
That's this.
That's the shit he said not to say.
No, it's funny. Like, what I'm referring to is and this is the back half of this conversation, but if you notice the beginning of this, it was never like, what's our story? What's this? It's just like, let's just get into it.
Right.
And yeah, there was a lot of banter, but hopefully it was worthwhile banter and on message versus just random fluff.
Ron, I think personally this was good enough. And we could have waited for perfect into June and July and August and September.
Right.
But this was good enough. We agreed to get started.
Yep.
And I think most people never do.
Well, when it comes to podcast, that's actually I have an advertising campaign right now, and it's talking about why podcasts fail. And the main reason so this is nothing about real estate, but it's interesting to me. Do you know how many podcasts are in America right now?
No idea.
Like 5 million.
Ooh.
Do you know how many posted last year? Like one episode?
How many?
180,000.
Whew.
So people like to say, oh, there's so much competition. Is there? When out of 5 million, only 180,000 posted one episode. Do you know what the drop-off rate is? It's like a 20% drop-off rate after doing 3 episodes. So after 3 episodes, 20% of that is gone. So it goes back to consistency. When it comes to content, when it comes to podcast, It's the validation of doing it and the consistency of doing it. So if you can just do it, I'm not saying you're ever going to be Joe Rogan. I'm not saying you're ever going to have 10 billion views, but that's not why you should do it. You should do it for the consistency of doing it, because if you can and we talked about this, especially in our business, if you can reach, do you need 10,000 viewers? Do you need 10 million viewers? Or do you need 10 viewers that can pay you $1 million?
For the 10 of you that would like to pay me $1 million, my wiring and no, it's perfect.
Yeah.
Look, I've got a message that I want to spread, and that's that, this business is good, and I intend to help make it better. I tell everyone I'm an idiot. I don't have a license to do anything other than carry a weapon and drive a vehicle. But I've done okay. And if I can do it, you can too.
So what are you looking for? Who are you trying to reach? What are you looking for? If somebody walked in this door, what would benefit you the most?
Me?
Yeah.
I mean, hopefully, I believe in know, like, and trust, right? So hopefully it's someone that's involved in real estate and they either have a deal or that I can finance, a thing I can partner in, something I can invest in. I mean, I'm thinking about selling my houses and starting to go all into commercial investments, because it's kind of like my mind is, if it works today, it's really going to work in 2 or 3 years. Mm-hmm. So yeah, I mean, I'm all about opportunity, networking, sharing. At Ternus, we look for single family investors that want to borrow money that's not based off their credit or their personal income and want to do deals.
Cool. And I'm looking for anybody that wants to do content.
Oh, I was supposed to ask you. Yeah, what are you looking for, Ryan?
I'm looking for anybody who wants to do content. Like if you're trying to do social media, if you're trying to do podcasting, if you need a pre-roll ads for your Facebook, if you need a full-blown commercial to be shown on the TVs, we got you covered. Also, if you need to do event production, we can do that as well.
And he's damn good at that. So, I don't know if I'm supposed to say bye or have a great day.
Hey, thanks for watching. This is kind of like you said, good enough.
Yeah.
Where I think the meat of the conversation is the most valuable, and as this develops, we'll add different elements. We'll add different intros, outros, all those things. We'll add different segments. But for the most part, if you liked what you saw, like it, subscribe it, share it. Tell us what you think. If you hate us, drop in the comments. If you love us, drop in the comments.
Hate gets more clicks.
Do you have troll comments? What's your favorite troll comment?
Oh, I just like it when people make fun of my look how fat he is. He has no discipline or whatever. I like that one, and I also like when people feel the need to make fun of Texans. Like, no, anyone that talks like that can't be successful. That kind of stuff. Like, they're fun to delete.
My favorite troll I've ever gotten was, he looks like an older, fatter brother of Jack Black.
Nah.
At the time, I had
Maybe.
longer hair, but Jack Black is like 10 years older than me, and I'm like that. It cut deep.
Yeah.
But anyway.
Bye.
Hey, thanks for watching. We'll see you next time.